Hello, listeners. Welcome to this episode of Cryptonomics. Before we jump into today's discussion, please keep in mind this recording is for general education and is not intended to constitute investment advice. Any opinions expressed are those of the participants and do not necessarily represent those of Witham.
Hello, listeners. Welcome back to Cryptonomics, brought to you by Witham. I am your host, Mark Eckerly, and today our guest is Ryan Schadel, who has been heavily invested in the Web3 space, and most notably is the CEO of Metavesco, a publicly traded company that has gone all in as a Web3 enterprise company investing in various digital assets, NFTs, platforms, and generating income as a liquidity provider. So we'll take a deeper dive into what all of that really means. But welcome to today's show, Ryan.
Hey, thanks for having me on.
With that kind of brief intro, why don't you give us some further background on yourself and kind of your journey into the digital asset space and how you got to where you are today?
Yeah, sure. I first started looking at crypto, really not even crypto, but I was interested in the technology, the hyperledger technology, the blockchain technology, and its applications for things like tracking billable hours for employees on a work site, and then tracking that billing to the accounts payable team from the client. And so the hyperledger, the technology behind it, I was probably more interested in than the idea of trading some, currency. My son told me to buy Bitcoin in probably, was it 2013 or 12, and I wish I had would have listened to him, because I would be a very wealthy man. But I did not. I actually laughed at it and completely dismissed it. And he reminds me of that frequently. But a couple of years ago, I started looking at it more, and when I actually researched it and spent the time to understand, and it started with Bitcoin. There are a lot of cryptocurrencies, but it started, for me at least, it started with Bitcoin and kind of evolved from there. Once I understood the mechanics of it and the intention, the purpose of Bitcoin and the idea of a peer-to-peer network of exchanging monetary value without outside interference or oversight, I went down that rabbit hole, and I really never came out the other side. So, that's it for me, and that's what got me interested in crypto. It started with the technology, and then it evolved into the economic proposition of it.
Yeah, I find that a lot. Once someone actually takes a deep dive into the rabbit hole, it's tough to come back out. You're kind of all in.
It really is. It really is. Well, there's so much that you can do. If you shed the preconceived ideas that we might have about money, monetary policy, there's a middleman in everything that we do. Once you shed those ideas and you start thinking on a global scale from a monetary standpoint, the things that could be done and the potential economic value that could be unlocked, I personally feel, and I'm not the only one, obviously, but I feel that there's, tremendous opportunity there, for humanity. I'm not a humanitarian. I'm in it for the money, don't get me wrong. But there's a lot of opportunity for the betterment of humanity, in my opinion.
Yeah, I mean, early on, the whole crypto space kind of had that negative connotation that it was going to be used for the black market, right, with the whole Silk Road scandal. And
Right.
once individuals educate themselves and understand some of the use cases for what crypto can do as a new form of currency, I think that's really shedding that bad reputation almost and bringing it to the forefront to help get that mainstream adoption almost.
Right. Well, and that's probably one of the things that interested me most was, and going back to my original interest was in the technology. So if you look at Bitcoin, um, it's extremely difficult to hide things using blockchain currency, okay, which is what we call cryptocurrency, because it's all on the blockchain. I mean, literally, you can go look at transactions. It's public. Everyone can see you moving money around. Now, it might be, somewhat anonymous to a degree, but you can't really hide a transaction. There's no backroom deal. I mean, it's all out there. Everyone sees it. So it was funny. There was I think about a year and a half ago, there was a hack of the Colonial Pipeline, if you recall, and the whole thing was they were demanding Bitcoin as the ransom, and the reason those guys got caught was because they demanded Bitcoin as payment because it's traceable and trackable, and the thing about it, though, it's permissionless. There's no middle person who says what you can and can't do with it, but it is viewable and trackable by everyone who wants to see it. And that is powerful if you believe in a global economy, and the potential that a global economy can bring to, all corners of the earth. You can move money across borders without an intermediary taking their cut, their 2%, their 3%. It's a currency, and I'm strictly talking about Bitcoin because I do classify everything else as a different thing. But Bitcoin specifically, it is a currency that is not poisoned by 8 or 9 different central banks trying to do their own thing. And that's why you see, a lot big swings recently in the forex market. There's big swings in valuations, like USD to euro. I think hit parity for the first time in like 20 years. I mean, that's great if you own US dollars. It's not so great if you own euros and you're buying things, in US dollars. But hey, one Bitcoin is one Bitcoin.
Yeah,
So
exactly.
right,
It's still denominated in the same dollar
right,
value. But I know, so to help take a deep dive in some of the other assets, because I know Metavesco is kind of, like I said, all in on crypto. So they're not just focused on
right.
Bitcoin. So tackling the crypto space from a few different angles. What are you most excited to explore, and where do you really see the future of the company as a whole from a sustainable operations perspective?
There's a lot of unpack there. Yeah. So, yeah, I mean, we are a web. So I call us a Web3 enterprise, and I think Web3 is a very broad umbrella. It'd be like saying, yeah, we're an internet company. It's a pretty broad. It could be a lot of things. Um, but Web3, I essentially, look at Web3 like this. You've got uh, the metaverse, okay, which is the environment, and that's um, maybe it's VR, maybe it's AR, maybe it's not, maybe it's just a web page. But it's the environment, okay, and it's an environment where you can own part of that environment and you interact with that environment with what I would currently say would be NFTs, okay, non-fungible tokens, and you transact in that environment with decentralized finance, which is DeFi. And so if you look at Metavesco, that's really what I'm looking at is those 3 areas. How can we get exposure to them? And so I think you know, the term metaverse was really, pop culture last year when Mark Zuckerberg, changed the name of Facebook to Meta Platforms. The thing is, he had talked about the metaverse previously on a earnings call, and that term has been around for a while. So I think we're still understanding or still trying to determine what the metaverse, quote unquote, actually is, will do, what it looks like. And there's a company called Improbable. They have put some really awesome tools together, and they're working with Other Side Meta, Yuga Labs. I know we'll probably talk about that a little bit to help them build out their metaverse platform. But I think, in terms of what I'm excited about, I definitely think what the metaverse can be, what we're building it into be, and I equate it to being back in like the early 90s. What's the information superhighway going to look like? We eventually stopped calling it that, and we called it the World Wide Web, and then we just .com, and now I think we don't call it anything. It just is, right? So I mean, that's what as far as excitement, I'm definitely there. In terms of our operations, so the bulk of our dollars are invested in liquidity pools, okay, and that's DeFi, where we are providing liquidity to the market. So if you want to trade a certain pair of cryptocurrencies, you're swapping one currency for another. We're the middleman there, or we're providing liquidity at least to the middleman. And in this case, it's usually Uniswap, which is a automatic market making platform. We're providing liquidity to the market so that you can come in and out of the market and have good price discovery. We get a fee for doing that. So we're literally cryptocurrency market makers, okay? Not unlike, the big Wall Street firms, Goldman Sachs being a market maker in stocks and bonds and whatever. So it's kind of the same thing. I mean, literally the same functionality at least. So it's not as sexy and fun as the metaverse stuff, okay? But the liquidity pools, as long as there's good volume, we generate fees off of the capital that we have tied up in those liquidity pools, and those fees pay the bills. And the idea is that we're able to take those dollars and we can either compound them, or we can take them and invest those dollars into NFT projects that we like, which are currently mostly limited to things that are at least in some way connected to Yuga Labs. Not exclusively, but for a large part of it. And so that's kind of the model that we have. We want to put money to work in liquidity pools, and we want to take those gains when we have them and put them into NFT projects that we think have potential down the road. And I do think it's down the road. It's not next week. We're not going to all be in Ready Player One next week. It's some years away.
Yeah, it doesn't
I
happen
wish
overnight.
that it did, but no. And truthfully, we want it to take a little while because we need to build up our asset base. So I mean, as a company, this dip that we had, yeah, it hurt to look at that over the last 60 days, 90 days. I mean, that hurt to look at that in the portfolio. At the same time, it's like, well, I mean, we are getting a better price point for some of the things that we want to buy. So if you have a long-term, investment horizon like we do, this is actually an opportunity, and at least that's how I'm able to sleep at night when I see Ethereum down 50% in the last 2 months.
Yeah, I was at a conference a month or two ago, and Ryan Selkis from Masari basically said a bear market presents, if you could sustain the hit, a bear market presents opportunities for growth and builders to really establish themselves. So when the next bull run does happen, everyone's kind of prepared and ready to go to hit the ground
Right, and
running.
you'll see that. So over the last probably 2 weeks, I can't tell you how many articles, how many tweets I've seen where some startup firm raised 10, 20. There's one 2 days ago, $450 million. So yeah, there's a bear market, but there's tons of capital still coming in, and there's it's kind of a meme at this point, but in the crypto community, bear market people build in bear markets, and I think that's exactly true. And much like the .com bust, there were most companies didn't make it out of that, but the ones that did made people a lot of money. And I think we'll see the same thing, but also think it will happen faster. And I might even argue most of it has already happened. I think crypto winter is over. You can quote me on that, but and I'm sure there's been a lot of people who've had to eat crow for saying that kind of thing. We might get a pullback, but in the .com bust, I mean, people thought it was the end of .com. It was a fad. It's over. And imagine being that. There's an article I read the other day talking about emails. Is the email fad passing? Could you imagine being the guy that wrote that article? I mean, so is crypto?
Anything from that point on has no
I mean, at the time,
credibility.
I mean, they didn't have really clickbait back then, but I mean, now you just say it's clickbait. But these companies, these platforms are building, and there will be opportunities if you can figure out how to get access to what they're building. And that's going back to the question about what I'm excited about with the metaverse and the idea of Web3. The idea of Web3, and like the major difference in Web3 and Web2 is Web3, you own your content. You have potential or access to own the part of the platform, or at least components of the platform. And so when I talk about Other Side Meta, which is a metaverse project by Yuga Labs, the idea that I can own part of that environment that I'm transacting in, or that someone else is transacting in, I mean, that's pretty remarkable for an average everyday American. I almost equate it like this. Like, let's say you go to the mall. There's a whole bunch of stores that are selling things, right? Well, what if you could just click a button and you owned part of that environment, owned part of that mall, or part of that store, or part of the ecosystem that was in the mall? That you can do that with Web3. And I think larger corporations are starting to realize that and starting to build more and more with that type of focus. Disney recently announced a deal to develop on Polygon. Mercedes yesterday announced a deal to develop on Polygon, also known as Matic. But those are, that's a canary in the coal mine if there ever was one for what's coming. I mean, when you see big money start to look at it, it's, they're going to follow into it because that's where the people are going to be.
Yeah, we've even seen some financial institutions or accounting firms kind of get some real estate in the metaverse as well. But you mentioned Yuga Labs, so I do want to transition over to that just to give our listeners kind of some background as to what is Yuga Labs, what is the Bored Ape Yacht Club, and kind of understanding the true. I mean, this is a great use case in my opinion of what NFTs can do and a true value proposition. So can you just give us a little bit of background? Because I know you personally, as well as the company, are big on the future and long Yuga
So the
Labs.
first NFT was created in 2014. A lot of people don't know that. So it's not, it's not that new. I mean, two years ago, it seemed like it was new. At least the concept of it. The first one was created in 2014. It was really, I would say, reached cultural phenomenon status with CryptoPunks, and I think that was 2017. Um, and it really didn't get more mainstream, and I don't even know if I'd call it mainstream now. It's still a very small village of people that are in the NFT space, okay? And we talk about this a lot in the Twitter spaces that I'm on, where I mean, I'll see someone in there. Well, for example, Yuga Labs, I mean, they raised almost $500 million in private equity a few months ago, okay? So yesterday I'm in a space, um, and so someone who has been in what I call an alpha group, looking for basically information and opportunities for investments, right? He's Illa the producer on Twitter. He's just got like a community manager position with Yuga Labs. I've been, friends with that guy on Twitter. On Twitter, I don't know him personally. I mean, we talk on Twitter, but for like a year, and now all of a sudden he's like a community manager for the biggest name in NFTs. I mean, that's how small Web3 is, right? I mean, it's still small. So, um, Yuga Labs came out, early last year. They launched the Bored Ape Yacht Club, and it actually took a few weeks to sell out. It didn't mint out right away. A lot of people don't know that either. I mean, it wasn't an instant hit, but it was just, it just had this cultural thing. I can't even really explain it, and I was late to the party on that. But the community building that they did was just on something on a different level. And so if you look at them now, without question, they are the blue chip NFT company out there. And I don't even know that I would call them an NFT company anymore, because they really have taken what I think is my idea of um, what this technology can do and can be, and they have really executed really well. Okay, so Other Side Meta is a project that they launched. This is their metaverse project, and it's all NFT based. So you have, if you go to OpenSea, you'll see the other deed for Other Side, and that is essentially like your deed for that particular land plot in the Other Side metaverse, right? Um, so if you've ever played, a video game, imagine you own part of, the environment that you're playing in, part of the city that you're walking to when you're playing Zelda, that kind of thing. Um, but these NFTs are different. They are dynamic NFTs, which have not really been talked about a lot, but I do believe will be the buzzword, over the next 12 to 18 months. A dynamic NFT is an NFT, which is a non-fungible token, that can be updated and changed based on actions that you or someone else takes. And so this is really going back all the way back to the technology of the Hyperledger. Okay, it's trackable, it's immutable, you see it, everyone sees it, and you're doing all that with an NFT, with a digital item. And so it's what started out as digital art, in 2014, is now really more about technology that I feel is represented by the digital art. And at some point or another, people will still be talking about NFTs not from an art standpoint, because what's really awesome about an NFT is just it's really just a smart contract. It's a smart contract that dictates if this happens, that happens, and um, we all know it now as art, but that will change as the technology, I feel, matures. So with Other Side Meta, it's an opportunity to own part of a digital environment that's being created by Yuga Labs, and these guys have just done an amazing job of execution. They launched their own token, ApeCoin, back in March. Um, They've got the Bored Ape Yacht Club, and so right now, floor, the lowest price Bored Ape, if you wanted to go buy one, it's 145,000. It reached at one point, I think, 400, 500,000 U.S. dollars, and I think that that's cheap, just from a historical significance standpoint. So um, they're continuing to build. They have a huge community that's behind them, and I feel that eventually they'll be the Disney of the of Web3, and I think they will build the world's first really truly interoperable uh, metaverse. Okay, and I think that'll be Other Side Meta. It'll take them a couple of years. I don't think this thing will be live tomorrow, but I don't think Facebook Meta platforms is
Yeah.
really that much further far ahead of them. So it's interesting what they've done in terms of building their community, and they have constantly kept that as focus for what they've been building, and that has rewarded them and the community, over and over again. So I think there are a lot of NFT projects out there that, I mean, if I'm being honest, 99% of them are going to zero. Okay, I mean they're just, there's some art value in some of them, right? But in terms of what they can build or will build, once you get beyond the art, it's really about having a team that can do that. And there's if you're in that space right now, there are only a handful of projects that you want to really attach yourself to, and Yuga owns most of those. So MeBits, CryptoPunks, Bored Apes, they own all of that. And I think Other Side Meta is going to end up probably being the biggest thing that they have in terms of total dollars, valuation wise, eventually. But it's early still, and you hear that a lot. It's almost become a meme now. But I mean, really, Bored Ape Yacht Club's been around for a little over a year. It's pretty early. We don't know what they'll end up finishing with, but they've got a roadmap out. You can go check out their website. They have a roadmap, what they're working on, what they're building. They're constantly communicating. And then the whole thing with ApeCoin, the ApeCoin DAO. I mean, we could we'll be here till 4 o'clock if we start talking about what that's going to do. Okay.
I do have a couple follow-ups there that I just wanted to get your thoughts on, because I do know that Yuga launched the ApeCoin back in April or so. So I'm curious to get what's the use case behind ApeCoin, right? Is that going to be the currency that lives
Sure.
in the metaverse?
So they have
or what does
stated
that look like?
that it would be the currency used in Other Side Meta. So if you have a shop or a game that you built, if you think about, and this is based only what we've read and what we can read, which is they did publish a light paper a couple weeks ago. And so the way I figure it is, it's like Roblox, but you actually own the stuff you're building, like in terms of like the general ecosystem, right? So in Roblox, you buy Robux that go to Roblox. That's how they earn earnings. Well, in this case, you would buy something from someone else who had built something, and you would have to spend ApeCoin within that ecosystem. That is the chosen currency of that ecosystem. And so that's kind of what they put out there. But then beyond that, it's anything that you want to build within the Bored Ape Yacht Club ecosystem, you would use with ApeCoin. So if you want to buy any Bored Ape Yacht Club merch, like they do merch drops, it's all in ApeCoin. You have to have ApeCoin to purchase this stuff. And then beyond that, you have people like me who want to build things that use ApeCoin. Recently, there was, and I can't recall it, it's too early, but there was a firm who created a NFT marketplace for the Bored Apes, and I think they're trying to get the ApeCoin DAO to fund development of this NFT platform. And so the concept is, so OpenSea currently is the largest NFT platform in terms of volume, and their customer service is really not great. Okay, so if you built your own, and by the way, 10% of the volume that happens at OpenSea comes from the Bored Ape Yacht Club community, through either a BAYC or MAYC. So it's, it really just makes sense to have a platform that's owned by the community. Because having OpenSea own that is very Web 2. Okay, the community should own it. That's Web 3. That's the whole point of it. These guys built this thing, and they're like, okay, here's a platform. You can list your NFTs. And every fee goes to buying ApeCoin and burning ApeCoin. So they charge a fee, and those fees go to buying and burning ApeCoin. So I think that the utility case for it is it can be whatever the community wants it to be. I mean, that's the beautiful part about it. There's no central party saying do this with it. In fact, Yuga doesn't even control ApeCoin. They created the token, but the coin itself is managed by a DAO, so it's all decentralized. They appointed an initial board of advisors or custodians, I forget how they termed it, to kind of guide the community. But it's all decentralized. Yuga has very little say-so over what happens. They have input, and probably, to be frank, if Yuga said, hey, do this with it, the community would probably say, yeah, let's do that with it. Although somebody came out and said, hey, ApeCoin needs its own chain, and the community was like, no, we don't. And there was an AIP that was proposed to like source, for an ApeCoin chain, Ape chain, right? And the community said, no, we don't want that. It's an ape
Can you define what
improvement
an AIP
protocol,
is?
essentially a proposal to the DAO. So what happens is if you have an idea, like, let's say that the ApeCoin community wanted with them to be the auditor for the ApeCoin DAO. I could go on there and do a proposal. Hey, I think Witham would be great. They have a lot of experience in crypto. They should be our auditor if we ever wanted to be audited. And I could propose it. And if you have ApeCoin, you can vote on that proposal. And if it passes, then it passes. It's pretty great. I mean, it's decentralized management, by the community that owns the token. It makes up the ecosystem. It's brilliant and simple all at the same time. And the cool thing about it is, I think it's a scratch of the surface of what can be done as more and more firms, more and more communities take to these types of things, these types of technologies, using essentially blockchain and hyperledger technology to decide what the future looks like and what it can. If I put forth a proposal and the community votes on it, the idea is you've already got such huge support. It's not contentious at all. And companies are catching on. The NBA is launching an NFT. I think there's a Playboy NFT coming out soon. I mean, it's beyond the art. You can take your memberships, your monthly subscriptions, your tickets, anything that's collectible. All of those things can be put on the blockchain as an NFT. And eventually, it's just a matter of time. You're going to buy a house, and it's going to be all the documentation will be through an NFT because it's trackable, traceable, non-fungible. You can't alter it. And so, I mean, if you've bought a house, it takes you forever to get the title work done and the legal. I mean, it's archaic. It's like 1900, 1905,
Yep.
protocols here. So eventually the technology is going to open up those things, and it will make for smoother, cheaper transactions on a host of things, not just digital art. That's really just the Trojan horse of it.
Yeah, I went through the house buying process a little over 2 years ago, and that really helped open my eyes for some of the use cases that this technology can do. I don't think my deed was registered with the town for 3.5 months.
Isn't that ridiculous?
After closing,
well, it's because it takes some person who's getting paid whatever per hour to click on the thing and to stamp the thing and to do the thing and to file the thing, and it's through. I mean, it doesn't make any sense to me why you wouldn't want that stuff to be on chain. And I think it's really just a matter of education. There was a long time where Congress was, I think, suing banks to keep them from using computers. So, eventually.
Yeah, I think any governmental agencies are always a little bit behind. I shouldn't say a little bit. Yeah, they're significantly behind.
You know what? That's a nice segue into regulation. Once the SEC and or the CTFC or whomever says that we're in charge of the regulation. We need to figure that out first. Who's in charge of the regulation? And then what is the regulation? Once that is done, it's going to open up so much innovation and so much investment into this space. There are huge funds that cannot put big dollars in this space because of so much uncertainty with regulation, and there's just a host of problems that will get solved once there's regulatory clarity.
Yeah, once there's some guidance. But no, that is, to your point, a good transition to a quick question I had on. So being a public company, right? You're required for certain disclosures, and I know you personally are very open and transparent on the company's operations, the company's strategy, the things you're interested in, what you're looking at. So I'm just curious. I mean, being very active on social media with Twitter postings. You mentioned Twitter Spaces earlier. I believe you also record some spaces on Twitch. So you're kind of educating the masses from every angle as best as you can. But I'm curious, with all that transparency, what are the pros, and then conversely, what are the cons do you see with that level of disclosure almost? Just being a Web3 company, because there is limited oversight, right? So you could be giving a little too much away.
That's the
where
thing about
there's still
Metavesco specifically. We are a Web3 company, and so generally in Web3 there's potentially a lot of anonymity. Well, we're also a registered SEC filer, so we don't enjoy that luxury of anonymity, but our investors and potential investors and shareholders do enjoy all that disclosure and accountability. So it's definitely a trade-off. But that's kind of why I set it up this way. Okay, so a lot of these DAOs and currencies are going to be deemed securities at some point. I mean, I'm fairly certain of it. Not all of them, but a large chunk of them. And do you want to have your money tied up in something that invests in the metaverse and then find out that they're an unregistered security and you can't get your money out? Right? So, okay, fine. I mean, I would love to not have to file
Yeah,
because it costs a
exactly.
lot of money to be public. Why can't I just make a token and just be a DAO and just, sell $5 million worth of tokens? I mean, it's so much easier. And you know what? In 2014, you probably could have gotten away with that. You can't today, at least not without getting, an unfriendly knock on the door. So it's kind of a blend. All right, so Metavesco is like a blend, Web 2 and Web 3. Web 2 in the fact that, all right, we're very transparent as we're required to be as a filer to the SEC. But I personally feel like that's not enough. And the thing about Web 3 is if you're doing everything on chain, it's all visible. Remember, if it's on the blockchain, you can find it, you can track it, you can trace it. Our wallet is public information. Okay, so people can see everything that we have in our wallet, which is, we have multiple wallets, but there are a couple big ones, and you can see what we're doing with the money that is in the company. And if you're an investor, I mean, so part of the thing we are talking about, Twitter and social media, we are an OTC traded company that's in crypto and NFTs, which is a very contentious regulatory space right now. To me, I feel like it should give us an advantage with investors that we're just being so overly communicative and transparent. And that part of the pros with that is that if you're looking at a company that's on the OTC, you can, I mean, look, you can see what we're putting our capital in. I mean, there's so many OTC companies, you have no idea what they're doing, and you find out once every 90 days when they file their quarterlies. And usually what you see on the OTC at least is they didn't do anything except spend money and issue shares, right? Well, most of what we do, you can just see it in real time right now. If you want to know how our 8 coin Ethereum liquidity pool is doing, you just check it the same way I do. I pull it up on Zappify every morning, and I'm using the same tools everyone else has access to. It's all free. That's cool and awesome, and hopefully will translate into a more liquid stock, a more vibrant community of shareholders. And I think that is something that is going to be a new thing and a more prominent thing in the trading community. So you look at AMC, they've got an awesome, huge, very vocal community of shareholders. Well, I think every company should strive for that, and I think we can do it, and it can just be inherent just because we're into Web3. Now let's talk about the cons to being so out and open. It's great when everything is going up, not so great when things are going down. So um, how do you answer? Somebody on Twitter says, "Hey, your portfolio on Uniswap is down 50% in the last 60 days." How do you answer that? Well, I mean, that's gonna come. That's gonna happen. If you're out there being that transparent. But I think it opens up the possibility to have those types of discussions with people that you want as investors. And if they are truly investors and not just day traders, I think that they will value that because everyone else's portfolio is down too. So it's not like anyone's immune to the drop that we've all seen, not just in crypto, but in everything in the last couple of months. But the idea that you can just sit there and have an open conversation. Now, initially, the SEC did not like this kind of stuff. Back when Reed Hastings, he got a Wells notice for is or was, I don't know if he still is, CEO of Netflix, but he got a Wells notice for talking about the Netflix financials on Twitter. And he argued, hey, I mean, it's publicly disseminated. Everyone sees it. Yeah, it's material information, but it's in the public, square. And then eventually the SEC, they'll say, well, yeah, I guess you're right. So, that's another one of those things where it just took everybody a little while to get it. And I think open and honest community town hall type communication with your shareholder base should just be SOP. It should be standard operating procedure. And that's what I'm striving for as CEO of Metavesco. And I think you particularly should consider that if you're an OTC company because everyone just automatically assumes if you're OTC, it's a scam. And I assume the same thing. Stuff I've invested in that's OTC, I automatically just assume it's a scam. But if a company goes out of their way to give you access to the officers, access to the books, which are on blockchain, I mean, where else can you get that? Right now, it's a huge selling point, but eventually, I think more and more companies will do these types of things, and it'll just be the norm, or it should be. I think it should be the norm.
Hmm. No, I totally agree with you. I think having that level of disclosure is great from investors, just from a general, um, like best practices point of view, almost,
Right.
where right we have nothing to hide. We're fully here. We're in the crypto space, and I know, again, back to my earlier point, there was that early negative connotation, but
Yeah.
you could see what we're spending our money on. You could see what we're sitting on, and having your full portfolio basically published. I think you post it yourself on a pretty regular cadence,
Yeah.
but as well just having anyone else wanting to log in and see how our assets are doing and performing, up or down, good or bad, whatever it may be, just helps provide that level of assurance to your investors, to your
Right.
shareholders, of how we're
Well,
doing and where we're going.
do you want shareholders or do you want co-owners? I want co-owners. Some companies might just want shareholders. You're Procter and Gamble, you probably just want shareholders, okay? You know, um, but look, we're a publicly traded startup that's doing something that for the moment at least no one else has done. There's no other U.S. based fully audited public company doing what we're doing. So let's have co-owners. I mean, technically, when you own a share of stock in a company, you're a co-owner. At least that's how it used to be. Now there's like Series A prefers that give voting control to Mark Zuckerberg, stuff like that. But you know, for the most part, if you want to share in the company, you're a co-owner. So why can't we have conversations like you would if you co-own the convenience store down the street? You go in, you talk to the owner. Yeah, because I'm a co-owner. So why can't we do the same thing? The
Yeah.
technology is there now where you could have a conversation with 10,000 people at one time if you wanted to on discourse or different platforms that are out there. I mean, Investor Connect, look at what AMC has done. There's 75,000 something people on there. I mean, it's insane. So I mean, why can't we look at shareholder activism from the inside out? That's how I feel about it.
Mhm. No, and I do have one more quick question for you, before we wrap up. So I just think with where the market has been over the last 2 to 3 months, I think this really opens the door for some DeFi opportunities, right? Kind of removing that centralized piece, even though that's the whole ethos of crypto as a whole, right? I want to self custody. I want to kind of get away from someone else holding my assets and having title over
Right.
those, which helps bring in the DeFi capabilities. So that's one thing that I'm pretty excited for, but I'm curious to get your thoughts on what you're most looking forward to for the rest of 2022, and where you kind of see the year playing out. I know you mentioned earlier that you think we're out of our crypto winter, but what does that really look like?
Um, so I think the crypto winter was caused by two things. One is just the overall market macro caused by the Fed mostly raising rates and inflation. And I think it's like I think it's Warren Buffett. When the tide goes out, you see you see who's wearing clothes and who's not. And so there were a number of firms that went belly up, or and are in the process of going belly up. Voyager most recently, 3AC, Three Arrows Capital, Celsius. So all these firms, they're centralized finance companies pretending to be decentralized finance. And you'd mentioned this previously. I think that kind of illustrates the whole reason why we need decentralized finance. I mean, it really just makes sense. Has there been a DeFi company go belly up in the last 90 days? The answer is no. All of these
Exactly.
companies that are having trouble are centralized, masquerading and pretending to be decentralized. And this goes back to my earlier statement about how blockchain DeFi can unlock value for humanity. There are people in countries that are just unbankable, and with crypto, and I'm mostly talking about Bitcoin, but with DeFi and crypto, those everyone is bankable. There is no unbankable. Okay, and it's not about whether somebody can write a bad check or not. It's just about the ability to move money around and have access to economic freedom, have self sovereignty, and that's really what crypto, for me at least, that's the ethos of crypto. So you're talking about what that means, for the rest of the year in crypto winter. I think crypto winter is mostly over because it was exacerbated. It was started by Fed hiking rates and exacerbated by all these other cause and effect things from Three Arrows and Celsius and everyone else. And there might still be another you know shadow bank out there that blows up at some point. But if there were going to be a DeFi blow up, we would have seen it already. And so you combine that with what I am most excited about is the merge of Ethereum. So I just read today the last testnet is supposed to merge August 6th, I think, between 6th and the 9th. And so the developers have said that Ethereum 2.0 will be here in September. Man, that's going to open up so much potential. There's so much, so many things that can happen. And the thing I'm most excited about is the things that we don't know about yet that will happen once that merge is done. Because here's what I think it will open up. I think we will see how scalable Ethereum can be. We already know currently, at least right now, it is in terms of the world computer. There is no more secure platform you can be on. Okay, there just isn't, and it's decentralized. So if we have that happen in September, I think you'll see a ton of capital come into the space for building applications on the Ethereum network. I think so. Right now, most DeFi activity probably doesn't happen on Ethereum because it's expensive to transact. So if you want to do a transaction, you go to a layer 2, like Solana or whatever, uh, one of those things. Um, and they know those are great networks and everything, but they're not Ethereum. And the minute Ethereum can process 100,000 transactions a second, there's just no need for these layer 1s or layer 2s that are on Ethereum in the first place. There's just no need for them. So um, I think that a lot of capital will pull out of um, the other protocols, and I think that money is going to end up in Ethereum in terms of applications being built, and I think a lot of it will be DeFi applications. One of my favorite yield optimizer platforms is Beefy.com, and they have zero vaults available on Ethereum, and it's because the transaction fees are just so high. And there's more capital trades on Ethereum every day than all the other networks. So why? Why leave the blue chip if it can be just as fast as everything else? And that's the question. Can it be as fast and can it be as cost efficient? Now, I don't think it's going to be as cost efficient, at least not yet. But once, and this is the thing I'm excited about, once that merge is done, we'll be able to see how scalable it can be. And I think people will start to build, and we will see that those gas fees will come down. And, I'm just excited about what can be built when the speed is increased that much. Because right now it's pretty slow. I mean, it's twice as fast as Bitcoin, which is still slow. So 100,000 transactions a second. I don't think we'll have that right away, but that's the goal. That's what Vitalik has said was the goal. So I'm excited about what kind of innovation that's going to bring.
Yeah, that's one of the things with, especially on the Ethereum blockchain. I know Bitcoin's experienced it too, and some of the others have, where depending on where the market's at, the transaction fees are just so outrageous, where you're basically kind of stuck and you don't want to pay. Sometimes transaction fee is more than the transaction that you're trying to do. So
There were times, in the NFT bull market where, I mean, it was, so right now, I mean, you can send, $100,000 worth of Ethereum for about $5, which is still cheaper than sending somebody a wire, but that's expensive. So, that should be about 50 cents, right? And, there are a lot of really good alternatives to Ethereum where you can send that type of capital for 50 cents. But Solana, and I knock Solana a lot. Okay, the biggest problem with Solana is it's not decentralized, right? It's just not, and they shut down the network every couple weeks. It seems like they have to pause the chain, and none of these other competitors to Ethereum are what Ethereum can be. They're better than Ethereum now if you're just talking about measurements of key performance indicators, but they can't be anything better than what Ethereum can be. And so I'm a bit of an Ethereum maxi on that from that standpoint. It is the world's computer, and I think it's going to be a super fast computer. There's just so much capital there, and I think even more is going to end up there once this is done. But it's there are there are a lot of I think layer 2s that will help build Ethereum, like Maddox and other, Polygon. They're doing some really cool stuff that's development focused and not so much transactional in nature. And I think that Polkadot's another one. Man, they've got some really cool stuff going on over there for if you're into gaming and metaverse stuff. I mean, some really cool stuff that they've done with these chains. So, I mean, it's still early. I think most of these will be gone, but the big ones that get the most innovation and the most adaptability will survive.
Yep. Well, I know we covered a lot today. We talked about a lot of different things, and I appreciate you joining me. Where can our listeners learn more about Metavesco, learn more about you? What are your socials?
Yeah, so Metavesco.com and on Twitter at Metavesco, and my personal Twitter is at CRyanShadel. We do a weekly spaces every Monday at 11 a.m. And we've got an email list you can subscribe to on the website. I'm on Twitter, pretty much 24/7. So, always available for questions, connecting, discussion. I can spend all day talking about crypto, NFTs, and metaverse, and anything that's a fruitful discussion, I am up for it.
Awesome. Well, thank you everyone for listening today on today's episode of Cryptonomics, and enjoy the rest of your day.
All views expressed in this podcast by Mark Eckerly or his guests are solely their opinions and do not reflect the opinion of Witham. This podcast is for informational purposes only.